Here we go, and we are live. Wow. So yesterday, the S&P 500 and the Nasdaq had the worst day since 2022. I mean, the Nasdaq plummeted more than 3.5%. So today we're going to talk about what's behind this move and will this continue? Is this the beginning of a larger correction, or was this just a quick dip and we're back to normal right now? We also have more earnings. We have earnings from Ford, American Airlines, Southwest Airlines, Honeywell. We'll dive into those. Plus, we also have today the GDP report and unemployment numbers, and the markets are reacting. So we'll take a look at all of this. And with that said, welcome to Coffee with Marcus and Mark. And today is Thursday, July 25th. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And Mark, wow, yesterday, what a day. We actually have to look at the Nasdaq. Down yesterday, what? 3.64%.
Yeah, pretty nasty, Marcus. I mean, just a huge move lower, and we gapped down. So we started the day off on a negative note, and then just continuing to slide, finishing the day near session lows.
Yeah, so if you look at yesterday, this is the 5-minute chart of the Nasdaq, as you said. I mean, just opening lower and then down. So also dragging down the S&P 500 yesterday. And if you look at the daily chart, we now have officially touched yesterday the 50-day moving average.
Look at that. And is it a coincidence or a technical reason that the S&P 500 is reversing off of that level? Self-fulfilling prophecy, maybe. Who knows? But definitely holding up at the 50-day. Little selling today, and now a bit of a reversal.
Yeah. But before we continue here, let's just talk about it. Because yesterday, I gave you one. I said, yeah, you were right. Today, I think it's your turn. Who talked about
Mark,
the 50-day moving average and that we might touch it in the next 2 weeks, 2 days ago?
You were right. I absolutely have to give you credit for that. I thought we'd get a little bit of a drift this week and gave you a hard time when you tried to extend it out to a 2-week analysis. But nonetheless, you said that we'd likely come down towards that 50-day, and that's exactly what happened. So
thank you. All right, so let's talk about it. What caused it? It all started yesterday with Google. So Google yesterday reported earnings, and on earnings was down, 5%. Now, the earnings weren't that bad. In fact, if you see here, it's green, right? So green means we had better than expected earnings. Look at this. So the estimate for the earnings was 184. They came in at 189. The revenue came in slightly higher. So why would Google slide? Well, this is where traders and investors looked behind it and said, okay, we want to see what is happening with the cloud business, because the cloud business is related to the AI hype. And this is where the cloud business was growing, but a little bit. And traders and investors recently heard from Nvidia, oh my gosh, we're blowing it out of the water. So if you look, for example, at the most recent earning from Nvidia, look at this. I mean, this is where they had a huge surprise. I mean, especially from a year ago. And this is what has been driving all of this AI hype. So yesterday, for the first time, traders and investors came to the conclusion maybe this AI hype might be over. And I mean, let's be honest. If you look at the S&P, if we go back there, so talking about AI, I mean, this has basically driven these markets over the past almost couple of years, right? So if you think about it, in December 2022, this is when ChatGPT was released, and this is when we started looking into the AI hype, and especially this year, mainly carried this whole move by the so-called Magnificent Seven.
Yeah, and I mean, this is where if you look at a daily chart in the last 2 weeks or the last 2 days, it looks nasty, right? But look at, I mean, there you go. It looks nasty, and then is this panic? Is this a sell-off that's just going to continue? Are we headed to the 200-day moving average? But you zoom out a little bit, and this pullback looks orderly, right? I mean, it looks like it was destined to happen. And so here you have a situation where some of the best performers in 2024 are taking a hit. And to me, it's not really much of a surprise because there was that AI hype, there was that AI enthusiasm where we were almost exponential. And now, at what point do you take profits? Well, maybe when earnings like with Google are good, but people wanted something more. People wanted blockbuster earnings, and then that combined with Tesla, another big name, just you're reporting bad earnings, and now it's just let's take some money out and maybe redistribute it in some other names, and we started to see that 2 weeks ago.
And I think today's heat map couldn't show it more clearly. Here's the
Yep.
Magnificent Seven: Nvidia, Microsoft, Apple, Google, Meta, Amazon, and Tesla. And look at this. All of these are down. And what do you see on the rest of the map? Everything else is bright green. Every other sector. So what does it mean? It doesn't mean that right now there's a broad-based selling in the markets going on. Right now, it means that money is being taken out of the Magnificent Seven, put into other stocks so that we have more of a broad-based rally, which is way more sustainable. So this where we're
Sure.
moving away from the AI hype back into, hey, maybe the economy overall is not going into a recession. Maybe the Fed does do the soft landing. Maybe we dodged the bullet here. And this is what we are seeing. And this is good. So this is
Yeah.
what we want to see. So the ugly move yesterday, we see already today, it is a distribution of money.
Yep. Hey, maybe there are more than just 7 stocks in the U.S. market.
Hey, maybe there are, maybe there are. However, looking at the Magnificent Seven here, yesterday, I saw that I read it this morning. Yesterday, $750 billion were wiped out. And with today's move, I think this is getting close to $1 trillion being taken away from the Magnificent Seven. And where does it go? Into all of these other sectors. $1 trillion. I mean, that's an
Wow.
estimate. This is what happened yesterday, but with these moves, I believe that we are probably closer to a trillion or above. That is a big rotation that's going on.
It is worst day since 2022.
Yeah. And then also, I mean, earnings are continuing, and we have some earnings miss here. So let me just zoom in a little bit. Actually, there we go. Okay. So earnings reporting from American Airlines. American Airlines disappointing here in earnings. Oh, actually, look at this. They are up right now. They were down 5% earlier today after providing a worse than expected outlook. Well, now I'm curious. Southwest Airlines also, wow, gosh, reversing the trend here. Up now 4%
Interesting.
after being down earlier. Okay, now I'm really curious. What's happening here with Honeywell? Okay, Honeywell still down 4%. So they reported earnings. And then we also had Ford reporting earnings, and they are down 16%.
Yeah, and this is where guidance starts to play a role because you have top and bottom estimates, the earnings per share and revenue, and some of those might have been mixed a little bit. But American Airlines weaker profit guidance, saying that the broader industry struggles with oversupply that has led to low fares. Southwest said the same, essentially warned its revenue per average seat mile may fall year over year. Honeywell also missed analyst guidance was the issue. So that sometimes means short term there is a repricing of the stock, is a nice way to say a drop.
Yeah.
Right. But then it could be that next quarter they're setting themselves up to actually beat again, right? A little trickery there. But a couple of down moves after earnings today for sure.
Yeah. And then also on the economic calendar today, we had news coming out. And wow, this was a surprise that we saw on the economic calendar.
Yeah, the advanced GDP, and this is, it plays into everything quite nicely, right? Because you do have the sell off in tech and the Magnificent Seven. The Fed's talking about Everybody's talking about when the Fed's going to cut. Right now, it appears as though September is what's priced into the market. And you don't want the economy to just come to a screeching halt or get worse with these cuts. And now advanced GDP coming out stronger than expected, 2.8%. That's a positive for everything right now.
Well, and it's kind of a double whammy. And at the same time, look at this. The advanced GDP price index are lower. So already coming down the previous month's 3.1%, previous quarter. So here we are talking about quarters. Expected to come in at 2.6%, coming in at 2.3%. So what does this mean? It means the economy is still strong and inflation is coming back. Now, this here is for the last quarter. What we are really interested in is to see tomorrow, how did we do last month, right? So over the quarter, it's good that we are going back towards the 2% that the Fed is looking for, but the core PCE price index tomorrow will be the big one. Now, also, Mac, I mean, unemployment claims, it's something that now is red flag report. It's the weekly unemployment claims, but it's kind of good that they're coming pretty much in line exactly with the expectations and not getting much worse.
I agree. And the next week could set the tone for the next 3 months. What do you think?
Next week? Well, yeah, because next week
the
we
next
have first
7 trading sessions or the next 4 trading sessions.
Oh,
Because you have core
absolutely.
PCE, you have the Fed, and you have one of the biggest weeks of earnings season.
Right. Plus, next week also we have unemployment claims, unemployment market jobs report next week. So yeah, I mean the next 7 trading sessions will set the tone because we also want to know if you look at earnings analysis and we hop out to next week, we want to know how does the rest of the Magnificent Seven do? Because we had 2 of them reporting, and next week we have Microsoft reporting, we have Apple reporting earnings. We have Amazon reporting earnings. We have Meta reporting earnings. So
Yeah.
we have 4 more of the Magnificent Seven. We already had 2 out of the way. So this means that 6 out of the 7. So all we are waiting for then is Nvidia that is reporting much later. But I agree. The next 7 days, there will be no shortage on volatility and market movement. And talking about volatility, look at the VIX, the fear index, the fear gauge, the volatility index this morning almost scratching 20. I mean, up to 19.36, retreating a little bit, but over the past few days, what a move from 12 to 19. I mean, this is what is this, like 7 or 60% move or something like this? Let me actually measure it.
Yeah, that's a nice little spike
Boom.
there.
62%. I was close enough with 60% move.
Yeah, that was nice to think that.
I mean, math live on camera. I mean, pretty good. Pretty good. All right. So this is what's going on overall in the markets. Now let's take a look at our positions and see what is happening there. And we first go to the WTF, and we still have a few positions. So we have still no new positions, no exits today. So we just have to manage our existing positions. And first up, AMAT yesterday having a really bad day because we're also looking here at semiconductors. So as this rotation out of semiconductors continues, bad day yesterday. Today, kind of going back right now, only down 0.1%. So this looking good. However, still below our entry price. So we have to wait until this comes back.
Yep.
All right. AMD with Nvidia also moving much, much, much lower. Getting closer this morning to our stop loss at 132. We were trading as low as 136, but bouncing back right now up to already 142. So we'll see what happens here.
Yeah. Nice little pop off of those lows.
Right. Then we both have Schwab, and Schwab yesterday also down, today up 1.5%. We'll take this, getting close to our entry. However, since we did add to this position, right now we are already profitable on this position. So liking this. Now let's talk about MU. MU is a position that you took. I decided not to take it, and you took it yesterday. Is that correct?
Well, I picked up shares at yes 2 days. No, yeah, 2 days ago.
Okay.
2 days ago,
Okay. I was
and
wondering if this was an OBE, open below entry for you, or if this was a regular entry. Okay.
no, it was a regular entry. But then I picked up some shares this morning at 106.79, so I added to it.
Right. So this nice reversal here. Are you already positive on the overall position, or are you getting there?
Last I checked, I was getting there. Yeah, I'm positive. I'm positive.
Positive. So this is where the ad definitely helps. And then we have CG. I decided to pass on CG. Initially, we decided to pass on CG, but you decided this morning to jump into it.
Yeah, it's on the OBE list, the open below entry. It was down, and I decided to pick up some shares this morning. It definitely pulled back even more. I got filled at 175.08, but nice to see that we're coming off of these lows.
Okay, so already back at 171. So this is looking good. All right, so no exits, no new trades here. The no new trades was super surprising for me. I thought
I
that
agree.
after yesterday, but this just shows how we are overextended to the upside because we are looking for a healthy dip, as we saw here in MU, in AMD, in AMAT, in Schwab. So, I mean, right now, the most of the stocks, I mean, based on the criteria that we use for our entries, are still too expensive. Don't show the dip that we want to see.
Yeah, and it was a shock. And then also with what we said at the beginning of this video, it might not have been much of a shock, right? Because the Magnificent Seven and semiconductors are taking a hit. And here we have a couple of semiconductor signals. And then we also have some individual earnings plays. And that's exactly what Schwab was, right? Where there was a drop on earnings. So it's not the broad market taking this big hit and dip, but it's a little more isolated. And hey, 2,000 stocks in the Russell 2000 are withstanding, or uh, they're holding up where
Yeah.
tech's selling off.
Yeah. Looking at our wheel positions, and first up here, CSIQ. I mean, CSIQ today having a great day, up 2.7%. And I mean, again, we have been drawing this trend line. So this trend line still intact. All right, go up here, break the 18. Let's break out of this wedge, and then move higher towards our cost basis.
That's plan.
All right. HAL Halliburton. So we both have the 3450. So we bought Halliburton at 3450. And right now, trading slightly below. You sold calls against your existing position. And what happened yesterday?
Yeah, I sold those calls for 35 cents and I was able to buy them back for 4 cents yesterday, which is 89% of the max profit there. And looking to sell 34.50 calls again. And when I checked earlier, the premium was at the 34 strike, not quite the 34.50. Taking another look right now. Yeah, well, 34.50 for next week. 30%'s there.
There you go. Double dipping. I love it. Selling it, buying it back, and selling it again. That's what we like to do. So today, having a good day, up 2.11%. Loving this. Coles, I got assigned at 2150, and yesterday Coles went lower. Today, up 2%. Just trading right now, slightly below my entry, and we'll see what happens here. So not yet able to sell the 2150, but waiting for a little bit more. If we are moving here towards, I want to say probably 21, I'll be able to sell the 2150. So this might happen tomorrow or on Monday. Let's see what else is going on with this rotation here.
Love it.
UPS, what do you think about UPS?
I really like that UPS is holding up after that earnings drop, especially what we saw with yesterday's move. It finished positive, and today started the day positive, down 0.5%, but looks like we're stable at these levels rather than seeing a bigger sell off and dip.
Yeah. All right. And then you got to talk about Ford. You got to brag about Ford. Come on. That's a good one.
So, two stocks I was looking at for the wheel strategy, and these would be earnings plays because there was extra volatility after reaction to earnings, and Ford was one on the list. Ford popped up, and it pulled back to what I consider to be a fantastic support level. Right, if we look at the second half of 2022, pretty much all of 2023, and even this year, that 1150 seems to be strong. So I went ahead and I sold the 11 strike for tomorrow's expiration, and I was able to get 180% annualized on those puts. So right now, the premium's really been sucked out of those options. I'm up 59% on the trade after couple hours, and maybe it will be an 80% exit today. Otherwise, I'll hold till tomorrow and see where we end up.
Yeah, and I mean, congratulations. At first, I was hesitant. I liked Ford. I mean, we talked about it with our mastermind members this morning. Many of our mastermind members jumped into it. I said, well, I already have 4. You have fewer because you're not in colds. So this is why you said, well, there's a great opportunity. I hesitated a little bit and say, okay, let's maybe hold off on this one. Then a few minutes later, I decided, okay, I wanted to. And I even tried to get 10 cents and wasn't able to get it. So, I mean, I was happy with 164% annualized. And here's the deal. I mean, when Ford was dipping, it was probably right around here when you got your 180% annualized.
Yeah.
And as you can see, even though recently Ford has dropped lower, this is where we see a lot of volatility. That's when option prices explode. And even though it moved lower, the price of the option decreased because the initial shock was out of the market.
Yeah, this is what's known as vol crush, right? Where the volatility, because at first there's uncertainty with the reaction to earnings and then some selling. So traders that are trading options, they're trying to figure out, just how much Ford is potentially going to move, right? And then when the move becomes a little more orderly and stable, it could be that it's dropping a little bit, but traders aren't as fearful. So then that volatility crushes. And that's why we like to sell options that are out of the money, because you could get some real nice profit quickly when you experience that situation, even if the stock hasn't moved that much or even has gone down, like you just said.
Hey, and I mean, congratulations. Awesome trade. I missed it. Whether it is a 1-day trade that you can close it today, or I mean, this would be kind of a 0-day trade, or a 1-day trade and expires tomorrow. I mean, great job. Congratulations.
Thank you. Yeah, I'm going to put an 80% in order right now.
Oh, gosh. Yeah, there you go. All right. Now, we'll take another look at the markets, because the markets right now, just something happened that you don't want to miss. And before we do this, we will have a few more dad jokes for you. It's this time of the day in the show where we'll tell you our favorite dad jokes, and then you can vote which of these jokes is better. And as always, Mark, you go ahead.
All right. In true dad fashion, last night I watched a show about beavers. It was the best damn show I'd ever seen.
Okay. All right. Not bad. Okay, here's mine. Also yesterday, a man tried to sell me a coffin. And I said, dude, that's the last thing I need. No? Yes? Come on. At least a chuckle. Okay. No. Oh, dear Lord. Okay. You vote. beaver and dam, or coffins. And the last thing. All right. With that said, let's take a look at the markets. Look at this. What a reversal in the S&P. I mean, after going
Oh, wow.
first negative, now we are positive. The Dow actually leading the pack of the indices. Actually, no, the Russell leading the pack with a increase of 1.94% for today. That's crazy. Dow being the second, followed by S&P and Nasdaq, just underlying exactly what we said. We do have the rotation going on. Look at this. I mean, right now, Nvidia down 5%, Apple down, Google down, Meta down, Amazon down, Microsoft down. And we see the whole semiconductor sector down, AMD 3%, Broadcom, Qualcomm. I mean, they're all down, and it's all flocking into these other stocks. And this is why mainly the Dow is leading the pack. So in the good old industry stocks, that's what we see here today.
Yeah. Interesting markets.
So we'll see if this rotation continues. You don't want to miss it because we'll be live again tomorrow. And if you enjoyed the show today, do give us a favor. Do us a favor and click on like. We really appreciate the like. And let us know in the comments which joke you like better. And then also, if you feel that this was information worth sharing, we have a share button right underneath the video. Take a look at this and just share it wherever you want with whomever you want. And if you're new to the channel, hit the subscribe button. We really appreciate you being here, and we hope that you found a lot of valuable information. And with that said, you don't want to miss tomorrow, because tomorrow, before the markets open, the core PCE index, the Fed's favorite inflation gauge, will be released. So you definitely want to tune in tomorrow. And until then, have a great rest of your day.
Happy trading, everybody.